Well, hello everyone, and thank you for joining us for Valuing Your Business and Planning Your Future with BBVA Compass and Experian. We want to make this session as useful and informative to our audience as possible, so please engage with our panel using the question and answer applet, which you should see in the WebEx controls. We'll try and answer as many questions as possible near the end of our program or as time permits throughout. If we don't get to your question, we promise to get back to you via email following the event. During today's webinar, BBVA Compass and Experian have teamed up to bring you a very special educational session on business valuation and financial planning. Our speakers today will be Jon Woodford from BBVA Compass and Karim Chehade from Experian. Karim Chehade is the Senior Director of Small Business for Experian Business Information. In his current role, he's charged with building and scaling best-in-class new products and partnerships. Prior to joining Experian, Karim held product management, strategy, and management consulting roles at Disneyland, Google, and Accenture. He has an MBA from UCLA Anderson School of Management and degrees in economics and Spanish from Cal State University, Northridge. Jon Woodford leads BBVA Compass Financial Planning Center, utilizing the power of America's #1 rated goal-based planning tool, MoneyGuidePro. His passion for financial planning began in 1993 when he started as a financial advisor. Through his direction, financial planning leads our process for working with clients of the bank, broker, dealer, and global wealth. Most recently, Jon consults with a global consortium of planning experts to help define the future of financial planning in Spain, Mexico, South America, the United States, and Turkey. As a disclosure, Jon is a registered representative of BBVA Compass Investment Solutions, Incorporated, a division of BBVA Securities, Inc., and a licensed agent of BBVA Compass Insurance Agency. And now I'd like to turn things over to Karim from Experian to begin part 1 of today's talk.
To share with you the learnings we have and the kind of high-level overview of valuing your business and planning for your future. I'm going to be focusing on the art and science of valuing your business. And I'd like to start by sharing what you see here on this first slide is a quote by one of the most successful business persons of history in our day, Warren Buffett. He noted that business valuation is the heart of investment and risk management, and without it, you are blind. That last part really struck a chord because as you think through kind of all the different reasons why you may be interested as a small business owner to understand your valuation, you realize that there are so many different use cases and examples where without those situations, without understanding your valuation, you're kind of walking a little bit blindly. Here you see tons of examples as to why valuation is important and instances in which you could benefit from understanding the valuation of your business. A couple I'd like to point out are specifically number 4, which notes create a succession plan. There's a focus here on planning, which Jon Woodford from BBVA will focus on in depth later on in this presentation. Another one here is explore funding opportunities, number 8. A lot of lenders out there look at several ratios and several financial numbers that specifically are in evaluation calculation. So there's a lot of correlation between the value of your business and your ability to get funding in many cases, especially for loans greater than $100,000. there's if you think through kind of history and go back to 1897 when Edison invented the stock ticker, that was kind of the beginning of public companies being able to know their own valuation in a very easy way, and for the public, all of us, to know the value of companies, of public companies, to have that very clear for us. You could go on to Google or Bing right now and look at a stock price and a market capitalization of any public company out there. But there are nearly 200 million private companies around the world that don't have that same privilege, and I want to talk about how we can get there as small business owners without having to invest as much time and effort as we needed to historically. Only 2% of small business owners know their valuation. A majority of business owners do not know their valuation, so they are, in a sense, walking blindly. There are a lot of reasons as to why we put off valuation. It can be really expensive. The average cost is approximately $8,000 historically to put together the value of your company. It's time-consuming. It can take up to 4 weeks to complete. It's complicated. It can be very complicated. Traditional business valuation methods performed, the business owner needs to gather tax forms and balance sheets and other financial documents. But we'll talk about how there are ways to get around this, and which leads a lot of people to say, not now. You usually wait until some form of important event to get that value and get clear on it. I'd like to kind of stress the fact now at this point that valuation, part of the reason it has been expensive in the past, time-consuming, complicated, and led people to push that activity back to understand the valuation, is because there's so many ways of doing it. It's both an art and a science. While we'll be focusing on the science of valuing your business quite a bit during the next few minutes, I'd like to remind you that and encourage you to think through what the value is to you, as well as what the value of your business is in the fair market. So by the end of this presentation, I hope that you're incentivized to go out, get your valuation, to understand your fair market valuation, as well as think through what the value of your own company is to you yourself and to those closest to you. So getting into valuing your business, there are 3 common approaches that, out of several others, but these are the 3 most common approaches to valuing your business. The first is a market approach, and the most obvious example of valuation using a market approach is in real estate. If you're going to refinance your home, for example, someone will come in to assess the value of your home, and a big part of the value of your home is tied to the recent sale price of homes, comparable homes in your area. This is relying heavily on a market approach, which involves analyzing recent sales of comparable businesses. The income approach, it seeks to transform measures of profits or cash flow into estimates using types of multiples, cap rates, and discounts. Some of those included are discounted cash flow or capitalization of income. And then the asset approach really just looks at the value of your assets. Sometimes it's noted as a cost approach. A lot of tools out there, as well as professionals who will value your business, will use multiple approaches in one to come to a fair market value of your company. There's 4 types of business valuation, and if you were to delve, you could spend hours and hours and hours delving deep into each type of valuation. But I think I'd like to focus on 2 areas, 2 things. The first is to share with you which are most common. The 2 on the left, equity value and asset sale value, are more common when it comes to a small business valuation, while the 2 on the right, enterprise value and liquidation value, are a bit less common. You'll see enterprise value occur more with public companies than with private companies, although it does occur with private companies. So the equity value, to get started, it's one of the most common valuations sought after. It includes inventory, supplies, fixed assets, intangible assets, in addition to liquid financial assets and minus liabilities. So in this case, in short, the seller, if they're selling their business, for example, using equity value, they would sell all assets and liabilities in this case. While in an asset value, it would just be, if we're looking at the asset value, which is also very common, it would only include inventories and supplies, fixed assets, and all intangible assets. So the seller in this case would keep their cash and receivables and deliver the business to the buyer free and clear of debt. So those are kind of the main differentiators between equity value and asset value. Asset value is part of equity value. Equity value has a little bit more, in a sense. That's another way to think of it. Enterprise value, it reflects a firm value as a functioning entity, and it's helpful that it facilitates the comparison of companies with, I think the key piece is with varying levels of debt. This is where it's basically the same calculation as equity value, but you would add in long-term debt into the equation. And then liquidation value is based off of the assumption that the company, the small business, is insolvent and one is selling the business immediately and just selling all the assets on the balance sheet with the satisfaction of all debts. So later on I'll talk about how to get your Experian valuation report, but you might notice that when you get the report, you'll see that your equity value, enterprise value, and asset sale value are all, for the most part, in a similar range, while your liquidation value can be very, very different because it's assuming insolvency at a specific moment in time. It might even be a negative number. So, from asset value and equity value, I wanted to share with you the most common types of sales of small businesses, which are asset sales and equity sales. In asset sales, which include inventory and supplies, fixed assets, and intangible assets. And in equity sale, commonly noted as a stock sale, the buyer, again, acquires all the assets and liabilities on and off the balance sheet. What is most common for small private firms are asset sales, though I would encourage you to research, depending on the industry you're in, what is more common for your industry. It may not be the case for certain industries to have asset sales as the common form of sale. In many cases, the buyer of a business prefers an asset sale, whereas the seller prefers a stock sale. I'd like to share with you where you can get your valuation report from Experian, and also kind of highlight other sources where you can learn your valuation. In the free realm, there are several calculators out there where you could search on Google or Bing, find business valuation calculators on there. And what those tools will give you are just a very high-level estimate of a valuation. Sometimes it will take into account the industry you're in and get you a little bit closer to a high-level valuation, but typically won't provide much more than a number and a few comments. Then there's another set in price range from free to typically $100 to $500, and these are typically tools where you're going to be entering a little bit more information on the performance of your business, probably some information on your performance last year and the year before. Once you enter that information, we'll usually provide you with a longer report that goes into depth on multiple valuation methods as well as the key performance indicators on yours. Experian's valuation report, which is offered in partnership with BizEquity, one of the largest providers of valuation products in the world, is in that range. Today, we're offering it to all who are on this call at our half price. It's normally $99. We're offering it to all users who to come in through smartbusinessreports.com/BBVA special, a 50% off, which will be live until October 6th. When you do go to this website, you would just need to search for your business. Once you find your business, you'll see that sale price available for you. To share just a little bit of what you'll see in your valuation report, on the left side of your screen, you'll see a table of contents of what you'll get in this valuation report. It's a 30-page report. It will provide you with your asset value, equity value, enterprise value, and liquidation value. It will explain to you the differences among the four. Then it will also take you through several KPIs or key performance indicators on your company, such one of them being return on equity, another one receivables over time, another one inventory turnover over time, debt to equity. There's several of them. And what they'll do as they take you through every single one of those key performance indicators is this report will let you know whether you are outperforming your own industry, meeting your industry average, or underperforming in your industry. So this will give you a little bit more clarity as to where you're at compared to other businesses in your industry. After getting this, my recommendation is if you think that you're going to have one of the events that were noted on the previous slides, whether it be a sale of your business, purchase of another business, planning to buy certain insurances, so on and so forth, I would recommend to then potentially consider reaching out to a professional to offer you to look into a more detailed analysis of the value of your business. It's up to you whether you want to get that detailed evaluation of your business earlier or later. In some industries, there are brokers who, if you are interested in selling your business, who would be willing to give you a more in-depth analysis for free or at a low price in exchange for your business as a broker, them being your vendor, their broker. So I hope that if there's one thing that you got out of this few minutes that we've had together covering valuation, is that you're incentivized to come to a better understanding of what your valuation is, both the fair market value of what your company is, what other people are willing to pay for your company, as well as what that valuation means to you, and that there's more clarity for you as to where you will get, where you can get those the valuation and where you can seek help. Thank you so much for your time. I'd like to pass it on, pass the mic to Jon Woodford from BBVA Compass, who will discuss planning for your future.
Fantastic. Thank you, Karim. Good morning, everyone. My pleasure being here. So as a quick disclaimer, best laid plans, right? But I've got a big construction crew just outside my window doing some road work. So if you hear a little background noise, that's what that is. So as a quick introduction, I have the privilege of leading a team of certified financial planners for BBVA Compass. And as such, we have access to some very sophisticated tools and resources as we work with clients of the bank and prospects in helping them build their financial plans, strategize for their financial futures, and make sure that they're on track to reach all of their financial goals. So I think the opportunity today to talk to you is really perfect. Now you've got the opportunity to get a business valuation of that business that you've built. And unfortunately, so many owners and so many partners and partnerships don't do that and don't take advantage of that opportunity. So I would recommend that you do that. All right, so 3 things that I want to do today if we can. Number 1, I want to introduce the offer at hand, what we're going to give you, and the opportunity to jump in and really do your own financial plan. Second thing is I want to get my hands dirty a little bit with you. I'm going to share with you a video, and then I also want to jump into our technology and share with you a small business case that we built within our financial planning center just within the last month or so. So I'm going to walk you through some of the details of this offering and show you exactly what you'll experience as you have access to our financial planning tools, which is unprecedented. We typically do not allow our customers to have access to these tools because they are quite sophisticated, but we've got a new model, and so I want to share that with you today. And then the third thing, of course, is the opportunity for you to ask some questions, get some answers, and to dialogue and converse with all of us. So with that said, let's jump right in and go into the details of the planning for the future. So as you know, right, planning will address, and planning makes a difference, and why you should work with a financial professional. Well, you know, one of the things that I firmly believe in is when you don't have all of the expertise as yourself, you bring in the professionals. You bring in those that do it, and that's what they do for a living. So a professional is going to help you focus on your goals, not just for retirement, but for assets and growth and management and risk protection, and ultimately for transfer of wealth, right? So a professional is going to help you address your concerns and your expectations for retirement. They're going to help you identify things that could be a threat, that could pose a risk to all of the hard work and everything that you've built. They're going to help you feel more educated and confident and in control of your financial future, and help you navigate, I think, the complexity of some of the financial parts, right? Taxation, business transfer and wealth and valuation, growth perhaps, right? Or entering new markets. So with MoneyGuidePro, this is one of the tools and technologies that we leverage as a firm. It's rated #1 for 9 years running now. And the end result is what you see displayed on your screen is it's going to help you get to a confidence meter, or a probability of success, if you will. So this will allow you to input all of your goals, all of your financial decisions as it relates to where you are today, so pretty much your current scenario. And then it's going to give you a snapshot for the future, and that's kind of hard to do, right? Who can predict the future? If any of us could, why would we be in the business we're in? But what we do is we run 1,000 scenarios on your plan and give you the likelihood that you should be able to reach your goals in the future. And so there's a lot of moving parts into that, but it's going to help you to get the questions answered and make sure that you have a high degree of confidence in what you can do today to make sure you have the best chance for success. One of the ways that we do that at BBVA Compass, of course, is that we address all of the wealth management issues. And as you look through this list, you're going to nod your head in appreciation because you've already dealt with some of them, and some of them you have not. And so whether you work with my team or whether you work with your own bank or a broker-dealer or some other professional in the field, or whether you do it yourself, I would encourage you to address these issues and make sure that each and every one of them is taken care of, whether that's planning for a business succession strategy. Maybe it's taking care of your family first, right? Education and family support. It may be something as simple as titling and beneficiary designations. There are huge tax consequences if we title our assets and our property incorrectly. And so a good review of your strategy will help protect you in the event of one of those things happening. And ultimately, the fair and equitable distribution of your estate through conscientious tax planning and conscientious estate planning. So the tools we're going to give you today and this week, I'm going to say it right now. It's valued at over $500. Many firms will charge upwards of that, and I have to pay annual license fees of over $1,300 a year. So that's not unusual to have a huge cost associated with it. This isn't just another Fidelity Investments retirement what's your number type calculator that you can do in 2 or 3 minutes, right? This is something that's a little bit more involved. It'll probably take you 30 to 60 minutes, and you can do it in the privacy of your home, and it's video guided and text supported. And then you get the results right there. You and your spouse or your partner, you'll have access to all of that information and all the details. So that's really what we're offering today, right? So when you get the invitation, and it's going to look something like what you see on your screen, that you've been invited, you'll be able to click the register button, input some basic information, just your name and password, so that's privacy protected, of course, and we'll want your email address and phone number as well. You can complete this lab at absolutely no cost to you, so it's going to be absolutely free. We're not charging for this access. And we're going to give you access for 14 days to be able to do this. So it is a limited time opportunity, but I think you'll find as you work through this process that it challenges you to think through what are my goals, what are my desires for the future, how would I define what retirement and success looks like, and it also takes advantage of the opportunity to protect you, your spouse, your children, your family, your business partners, your partnerships, and making sure all of those things are taken care of. I do recommend you do this on a larger screen, at least 10 inches or bigger, because it is a split screen environment. On the left side of the screen, you're going to have the actual access to our financial planning tools. On the right side of the screen, there's going to be video guidance, page by page, telling you exactly what to input into the tool. And at the bottom right of the screen, you'll have text support with one of our agents at MoneyGuidePro that will answer any question about what you're inputting into the financial plan. My recommendation at the end of this process is that you reach out. There will be a button that allows you to have an advisor reach out to you and discuss your goals and help you come up with a recommended strategy. So you can choose to do that or you can choose not to do that, your choice. But my recommendation is enlist a professional and let them give you a second opinion to make sure that you're on track. All right? So that's the first thing. Next thing I want to do really is let you know that as a part of this, we're going to give you some resources. So there's a nice PreLab checklist, and this will give you an idea of some of the documents you ought to have at the ready in your hand, in addition to your glass of wine, of course. So as you're sitting at home, you know, maybe towards the end of this week or this weekend, have some of these documents available to you. And then go ahead and register, and you can begin your lab within just 2 or 3 minutes of getting that invitation. All right, so that's a lot of me talking. I want to shift gears for just a little bit here, and let's share my screen for a minute. I want to share with you a quick video that explains this offering in a little bit more detail. So if you'll watch your screen and turn up your speakers, you should be able to hear this just fine.
Have you defined your goals for retirement? Do you know if you will be able to reach them? Are you in a position to have fun in retirement? Planning for retirement is important, and the best way to get started is by picturing the way you want to live your retirement. Setting your retirement goals can help you determine what you need to do financially to achieve them. My Money Guide is an online guided planning experience that helps you create your own personalized plan for retirement while making the most of what you have. The award-winning program walks you step by step through a proven process using content created by certified financial planners. It's safe, private, and you won't be sold anything. My Money Guide is unique because it focuses on you. It's built around your needs, concerns, and goals. How much time you spend building your plan is up to you. You're in control if you go at your own pace. We walk you through the process, providing education, estimates, and tips along the way. You start by identifying your expectations, concerns, and goals for retirement. You then prioritize the importance of each of these items. It's easy to input your income, assets, and investments. You decide how much risk you're willing to accept. You review different Social Security claiming options and choose the one that works best for you. Today, we're living longer than ever, so it's important to include healthcare costs. We can help you include those costs so that an unexpected health event doesn't derail your retirement. You will quickly be able to tell if you're on track by reviewing your results and checking the confidence meter. You can make adjustments to get into the green zone. The confidence meter also helps you focus on your plan succeeding in the long term, not reacting to market headlines. One of the most interactive tools, the Play Zone, allows you to instantly see how changing some of your expectations, such as when to retire and how much to save, can impact your plan. My Money Guide also allows you to detect the effects of risks outside of your control, such as a potential market downturn or cuts to Social Security. With your completed plan, you decide whether you'd like the professional advice of the advisor or firm that invited you. The planning experience through My Money Guide is educational. It's designed to help you ask better questions and feel prepared. Then you will have a much better sense that you're on track to reach your retirement goals.
All right, so that's the quick video for My Money Guide. So now I want to shift gears a little bit and actually get into the tool and show you a live demonstration of a small business client that we've worked with recently. Obviously, I've changed the names and some of the numbers to protect them and their privacy. But what you're looking at on the screen is what you just saw in the video, right? So the end result is you'll be able to have an answer to that simple question that everybody has, not just those of us on the call, but myself and my family and you and your friends and families and neighbors. Everybody has the same question. Can I fund all of my goals without running out of money? Right? So that's the big question. And in this scenario, you'll notice that they have about a 98% probability of success on the confidence meter. So that's a high degree of success and a high degree of likelihood that they're going to reach their goals. And with careful planning year over year, they're able to reach those successes. So let me show you some of the inputs and some of the experience that you're going to have as you build out your financial plan through this invitation that we're giving you today. So here we have the Moore family. This is Pete and Grace. They're both about age 48, both employed. He's got a small business that he started called Moore Technologies, and of course she works there part-time as a CPA. They have good income, they live in the state of Texas, and know that the tool does have an overlay of tax sensitivities. So by listing it as Texas, it automatically will evaluate what are some of the state income taxes, and as you know, Texas does not have one. In addition to this, they've inputted some details on their daughter, Kate. She was born a few years ago in 2001. She's 16, so as you can start to imagine, she'll be anticipating going to college soon. They also, at the beginning of this, and you'll have the chance to do this as well, and I think it's really crucial to have this conversation. I wouldn't try and do this by yourself. Bring in your spouse or partner and have this conversation together. What are some of your expectations for retirement? Well, for Pete and Grace, it was having an active lifestyle. For him, for her, it was about having a quiet lifestyle. He wanted to work by choice. They both want time to travel. He'd like to continue with his business or start a new business, and they both want time with friends and family. Some of the concerns that they've identified, though, is that certainly he doesn't want to suffer investment losses. She's a little concerned about too much time together, right? They're both concerned about running out of money. And there's also family history of health care issues and long-term care issues around Alzheimer's. So those are concerns that they want to address, and it certainly needs to be a part of their financial goals and their financial circumstances. So once we get done with the personal information, you'll be able to go right into the goals section of this tool. And this really is where the magic happens, everyone. Take a look at the screen and all of these icons. Now, you can do another one as well if you have a separate goal. But already, Pete and Grace have told us that they want to retire at age 65. They need about $220,000 a year to cover their expenses. And remember, that's in today's dollars after taxes. So that future will actually be much more than that. It'll be closer to $280,000 or $300,000, right? Because we do have standard inflation rates baked and built into the tool. They need a new vehicle every 5 years during retirement. They want to make sure that they fund all of Kate's education and college needs. And, of course, they want to address, the local football team, right? They want to go to the football games, and they'll want that every year during retirement. But very quickly, one of the things I noticed is that they didn't make any plans around health care and long-term care. So I'm going to add in a health care goal, and the way you do it is merely click the icon and drag it into either a need, a want, or a wish. Well, since healthcare is a need, it's automatically going to pull that in, come up with the national averages, and find funding to address all of Medicare Part B and D, a Medigap policy perhaps, any out-of-pocket expenses, any insurance prior to Medicare, so it has all of the national averages, plus the state of Texas averages, and you'll notice the inflation rate for healthcare is 6.5%, which is great, quite a bit more than your standard inflation rate. So that's going to have an impact, certainly, on their goal and their ability to fund those goals. So I'm going to click Done, and we've added that now as a part of their goal funding. When we look at the money or their current scenario where they are today, there's several tools and inputs that you'll be able to use. For example, Social Security will automatically be brought in. If you have other sources of income during retirement, such things as part-time employment, maybe annuity or royalties or pension or rental property, any of those types of things, he anticipates taking a minimized check from his More Technologies each year in the event, or about $120,000 a year in today's dollars after taxes. That might be one of his goals as well. Looking at the investment assets, you can quickly bring over any contributions, any assets, or any portfolios that you have held anywhere. So here we've automatically listed their 401k plans that they have set up through their employer, which is More Technologies, the current values and how much they're saving in additions. Pete's got a 529 plan. Certainly that's going to go towards Kate's college expenses. They also have a brokerage account held over at Schwab, held its joint rights through survivorship with about $250,000. And then Grace has a traditional IRA that she's been contributing to each year. So it's very easy for you to add one total amount, summary totals, or add investment accounts by stock symbol or by ticker if you want to, because there is an integration with Morningstar that allows us to price these assets every day. Some of the other inputs that you'll see is the ability to input details about your assets. Now, I'm not talking investment assets here. These are going to be more like collectibles, your home values, your business, properties, maybe the cash value in your life insurance policies. So here you can see they've added in the value of their home, the value of More Technologies, which they're really not sure what it is. He estimated about $3.25 million is what it's worth today. But as a future value, a few years from now, in 2040, they anticipate or they expect that it might be worth $4.5 million, but it might be on the high end 5.5 or on the low end 3.7. Imagine if they took advantage of the Experian offer to get a business valuation, they could lock that value in right now, and it's going to make it even more meaningful as they look at their current scenario. They do have rental property assets and whole life policies as well. They've listed some insurance policies. When you look at liabilities, these are, of course, going to be any mortgages that you hold, any loans that you have, whether it's a business loan or maybe it's a personal real estate loan. Here they've got rental properties, their mortgage, and then, of course, the business property for the warehouse that they have where they operate more technologies out of, which in the end gives them their financial statement or their balance sheet, right? Well, now they've got a net worth statement of assets, both investment assets and other assets. Any liabilities will give them a net worth. And you can click through and see the details of all of these as you do your own financial plan. But in the end, you're going to get to a current scenario that lets you know where you are today at whatever stage of life you're in, whether you just started your business or whether you're right in the middle of it and you're trying to grow and expand, or if you're at the tail end where you're looking to maybe transfer that or maybe even go through a sell type scenario. But you have that simple question, can I fund all of my goals without running out of money? The first time we ran this scenario, if you remember, they were at a 98% likelihood. But we just added in the healthcare expenses, right, as another goal. And so that dropped their probability of success to about 76%. And so now, you know, there's some opportunities to see, is that a good result? And what can I do to maybe even bump up that score a little bit and get a higher degree of confidence in my financial plan and outcome? One of the things I want to show you, of course, is that as you go through this, you can get into some of the recommended scenarios and actually play with some of the onboard what-if tools and play zone tools that you saw in the video. So here now we're going to reallocate some of the portfolio and make it maybe more in line with their risk tolerance. We're also going to look at the play zone so that they could get right in there into the play zone and drag some of the sliders to see what kind of an impact that might have on their financial plan. So here, instead of age 65, their full age retirement is actually 67. So what if they worked 2 years longer rather than retiring right at 65? Well, now they increase their likelihood from 78% to 90% just by adding on an extra 2 years of working full-time in the business rather than retiring early and taking a minimized Social Security payment as well as a minimized retirement benefit. You could look at the amount that they spend in retirement, their health care expenses, how much they're going to spend for that SUV every 5 years, Kate's college, football tickets, and certainly we could bump up the savings and special assets. So there are tools here that would maximize your 401k contributions or any other contributions to qualified plans. There are tools here that maybe you haven't thought of before where you have the opportunity to really dive into the details. And in the end, if you want to, you can explore some of the details, and the one I like is the Combined Details Report, because it gets into the cash flow of exactly what's happening. The green balloon here represents retirement. The big spike is when they sell the business. And then, of course, you can see over time of their plan, eventually they hit mortality, right? But through time, you can see the growth and distribution of their estate. And year by year, as you get into the details, it shows you what's the value of your assets, how much are you adding to assets, what are your investment earnings, how much are being taken out by taxes, right? And then, of course, what happens when they return. And so here you have a cash flow report of all the expenses. And remember they said they wanted $220,000 a year in retirement? Well, that first year of retirement, they'll actually get $351,000 because of inflation and because they've been planning in advance to help them get there. All right, so I'm going to take a big breath because that was my timer saying that I've kind of run over my my allotted time. And so let me jump out and go back to our slideshow for just a minute. In the end, everyone, when you do your own financial planning, and once again, you'll be able to do this in the privacy of the home. If you input the plan with good, complete data, you're going to get great results, right? You're going to get a current scenario that exactly mirrors where you are today. Shortfalls and risks are going to be quickly identified, and I recommend, once again, that you contact and have an advisor reach out to you with the recommended plan. Now, whether or not you implement that plan, that's up to you, right? But our advisors will give you what they believe is in your best interest and will make recommendations for saving, spending goals, risk mitigation, and making sure that you're on track to reach all of your financial goals. So in summary, next steps, look for the invitation via email. You're going to get that invite within the next day or two. It's going to come from BBVA Compass from my Financial Planning Center. Now, my apologies if it hits spam folder. It could do that. I don't know what your spam settings are. So since it's coming from my bank, it may hit your spam folder, but please rest assured if you'll bring that into your inbox, you can click the register now or learn more buttons and be up and running very quickly, building out your own current scenario using our award-winning financial planning tools. I'll include that PreLab worksheet, of course. I mentioned it's good for 14 days, but hey, at the end of the 14 days, if you still want access, just hit that button requesting an advisor, and I'll make sure that my advisors give you unlimited access to this tool so that you can use it year over year, track your progress, and make sure that your goals are consistent, make sure that you've got a plan for reaching those goals, and make sure that there's nothing that's going to be left to chance that might derail your financial future and everything that you've envisioned for that success. All right, so thank you for the opportunity to address you today. Look for those things in the mail to come, and I'll turn it right back over to our hosts at Experian. Thank you.
Okay, thank you so much, John. And we did have a question from the audience about locating someone to help them. It comes from a business owner who is interested in finding an advisor. How do I find an advisor?
Wonderful. So within the technology, as you complete your lab, on the last screen, there's going to be a button that says Request an Advisor. If you'll click that button, we'll get an email notification, and I'll look at the area of where you are and make sure that I find an advisor in close proximity so that you have somebody that you can speak to in person if you prefer than over the phone. So just click that button that says Request an Advisor at the end of your financial planning lab, and I'll make sure that that connection is made and somebody will reach out to you within 24 hours.
Okay, thank you. And then this question is for Karim, and it's about the show Shark Tank. The person asks, they say that Mr. Wonderful gives our business owners a very hard time whenever they do a 10x valuation. Why do they get so upset about businesses that they think are worth more than they really are? And what is the 10x calculation they are referring to?
Oh, that's a great question. So for those of you who haven't watched Shark Tank, a lot of business owners, small business owners will come in and ask for investment from a famous shark. And one common but also a bit of a mistake valuation method that some small business owners use is they take their revenues or their EBIT, which is their gross profit margins, and they multiply them by 10x. And in real life, most cases, why I think a lot of investors, whether it be the sharks or other investors or lenders, could kind of balk at that number is because that's usually the very, very, very high end in terms of multiples. If you are taking your gross profit margins, common multiples are taking your gross profit and multiplying it somewhere between 3 and 10, depending on your industry, as well as the success of your business over the past years and it's the future of that industry. So there's that, and then if you're taking a multiple from the revenue number, which is not as ideal, but sometimes used for companies that haven't had profit for a while or haven't reached profit yet, those are typically in the half to 1 times revenue. So if revenues are, for example, a couple $100,000, it could be as low as half that revenue as the value of your business to 1 times the amount of revenue, assuming there's no profit. Sometimes, if you're a tech company or in certain industries, that range of the multiple would be 1 to 3 times, but 10 times is very uncommon. So that's one of the main reasons they'll kind of balk at that 10 times number, even though it might look pretty on paper.
Okay. Excellent, excellent. And there was a question from Francine about what proof is there of improved outcomes for people who use advisors? Jon, can you comment on that?
You know, that's an interesting question. What proof is there that utilizing a financial advisor will increase your outcome or make it a better scenario for you? I don't know that I have the proof at the tip of my fingertips. But the one thing I do know is that the financial professionals, this is what they do for a living, day in, day out, and within our firm, of course, the average advisor has a tenure of over 15 years in the business. So they're going to have scenarios, they're going to have ideas, they're going to have situations that maybe you haven't thought of before. For example, the 13 wealth management issues. They are fully versed in what those mean and the impact that they've seen to other clients. So my recommendation would be is that if nothing else, have a conversation and listen to what they've experienced and what they've seen in their lifetimes, and then with that information, you get to make your best decision. I'm a firm believer that with good intel and good intelligence, we can all make our own best decisions. And so this will allow you to make that decision and challenge their recommendations if you think you've got a better way to do it.
Excellent, Jon. Well, I think we'll have to leave it there. I'll start to wrap up. I hope you all found this webinar very informative and helpful. We'd like to thank everyone for attending today's session. Also, thanks to Jon Woodford from BBVA Compass and to Karim Chehade from Experian for presenting this information. Look for a follow-up email from BBVA and Experian with details on your discounted business valuation reports and also how you can try My Money Guide from BBVA Compass. And thank you all and have a good day. And yes, there will be information on the slide deck in the follow-up and also a recording that you can watch at your leisure. Good day, everybody.